I have the honor today to have a conversation with Nigel Clarke, the Minister of Finance and the Public Service of Jamaica. Before going into an initial quick remarks from the Minister, let me just introduce him a bit on the personal side. So, Mr. Clarke graduated with a first-class honors degree in math and computer science from the University of the West Indies. Then he was a Rhodes Scholar at Oxford, where he earned a PhD in mathematics. So the mission has strong difficulties with you, I guess, each time you discuss numbers. He had before becoming in public service, a very important figure. He had accomplished career over many years in the corporate sector in Jamaica. He has been senator in the upper house in Jamaica in the past. He was appointed in 2016 by Prime Minister Holness as ambassador at large for economic issues for Jamaica. And then he worked very closely with the fund on the program. And since 2018, he has been member of parliament for St. Andrews and the Minister of Finance of Jamaica. Probably you all know, but I want to stress that Jamaica is a very important example of how can a country and the fund partner, and the country really make immense progress in economics. Well, finally, let me just say that the minister is an impressive, very good chess player. He organizes chess events to play very well chess. And through chess, he also works in some causes for the youth. And on top of that, he's chairman of the National Youth Orchestra of Jamaica. So. Anyway, even the daughter and the son are good chess players. So let me first welcome the governor. So let me give you a few minutes to brief whatever you want to as introductory remarks, and then we can go to Q&A. And I have a few questions to ask you before we go to the people.
We can,
if you want, we can go directly to Q&A.
We can go directly to Q&A if that's what you prefer.
No, perfect. Let's go to that. Let me jump into macro and directly to Jamaica. No, reality is that the effort that Jamaica has done in the last few years, several years actually, has been very impressive in terms of consolidating public finances and lowering public debt. Some people wonder whether more effort should be devoted to foster growth. The big question here is instead of, in addition to, I guess. What are your views on this?
Yeah, I think that's a very good question. But I think the answer for us is quite clear. It's one thing to look at the average rate of growth. It's an entirely other thing to look at the volatility of growth. And Jamaica's experience of decades of macroeconomic instability has taught us that macro instability makes growth volatile, makes it uncertain, and economic shocks exacerbate and cause other shocks, and recovery periods get elongated. I'll give you the two sort of big experiences of that in Jamaica's history. We had economic decline in the 1970s due to economic shocks as well as social turmoil. The economy declined in 1976, 6.5%, declined in 1977, declined in 1979, declined in 1980. It was not until 1989 that we recovered to pre-1976 levels of economic output. That's a 14-year recovery period. in the global financial crisis, the economy declined in 2008, declined in 2009, declined in 2010, the largest just being about 3%. It took until 2018 to recover to 2007 levels of economic output. And there we weren't having conversations about stability or compression or anything like that. Now, that kind of economic, that kind of long recovery periods stunts economic development. And if you look at the data from another point of view, we started measuring growth quarterly in 1997. Between 1997 and 2015, we had 37 quarters of economic growth and 33 quarters of economic decline. When you compare that with the United States, looking at year-over-year growth now, not not quarter-over-quarter, year-over-year, quarterly growth measured year-over-year, they had 76 periods of growth and 4 of decline over the same period. Now, when you look at what we've been able to achieve during this period of stabilization, though it involved trade-offs, though it involved compression, we had 20 consecutive periods of quarterly growth between the end of 2015 and 2019, the longest period of unbroken quarterly growth since we started measuring it in 1997. Prior to that experience, we only had quarterly growth stretches to a maximum of 9 quarters. 3 quarters of growth, then decline. 4 quarters, then decline. The maximum was 9. And with the stabilization effort, though it involves a trade-off, though it involves compression, what comes with it is less volatility, longer periods of growth. It elongates the economic cycle and gives us a greater chance for economic development.
Thank you. I guess the way I think about this is perhaps that you have the luxury to think about structural reforms and more growth once you have your house in order. Otherwise, the day-to-day sort of eats you and you cannot raise your head. No?
Correct.
So it's a luxury to be able to discuss now about
Correct.
growth. Let me turn now to the side of the fund and ask you about how you think we can do things better and have more examples like Jamaica in terms of the engagement. We're very pleased to have been the opportunity to support Jamaica in this endeavor. But it's not always the case that the fund has success, and where other cases where things get more complicated. What would you say we need to change and to do better?
Well, I mean, it's, in the case of Jamaica, it's not the fund alone. In the case of Jamaica, what you have was a country that wanted to reform, that wanted to change, that made the reforms its own. The principles are common, but how those principles find expression in a particular country, and in the case of Jamaica, it found expression in our, through our own ownership of the program goals. In terms of what you can do differently, fund programs don't only operate in an economic context, they operate in a political, economic context. And understanding the goals and aspirations of the people, what they've been through and their history, I think is a very important part of translating broad principles into actionable, implementable steps that countries can own for themselves.
Talking about politics, how did you manage to produce this consensus, this political consensus, to move forward with the program and with this period of efforts for a better future?
Well, Jamaica has engaged in this sort of consolidation effort over the past 10 years, beginning in 2013. And prior to 2013, we'd have had a young prime minister take the reins of government at only 39 with all intentions to do the right thing, and came to the people of Jamaica and told them the truth back in 2010, that bitter medicine was to come. Well, he promptly lost power and served for the shortest time in Jamaica's history. But what that meant was that an incoming government had no choice but to implement austerity in the context of an outgoing government that formed the opposition that campaigned on it and lost. Jamaica never had a better chance in terms of the political forces at work. And that provided a platform that was leveraged to the credit of the government that followed. And Jamaicans reacted with horror to find out that the sacrifices they had made in the first fund program of 2010 had to be repeated and deepened. And here we're talking about debt exchanges and wage freezes, and therefore demanded that they be at the table for the conversation. And what started out as the public sector equivalent of a creditor committee, an internal creditor committee, it gained social credence with the inclusion of the unions and academics. And Jamaica innovated this concept of stakeholder oversight and involvement that we call the Economic Policy Oversight Committee, which was a key innovation that has lasted across administrations and has been exported to other parts of the world. So I break the 10-year period down into those first 3 years under the previous administration and the last 7 years under the current administration. And one thing that is a truth across all democracies is that policies will continue if they have domestic support. Now, in generating domestic support for the continuation of stabilization policies and policies that right the structural imbalances in the Jamaican economy has come about because we've been able to demonstrate their effectiveness, and we have been able to strategically share the gains. I'll just give you 2 examples of that. The first is that for the 22 years prior to 2016, for 18 of those 22 years, every single budget involved new and higher taxes on the Jamaican people. For 18 of the previous 22 years, every single budget involved new and higher taxes from the Jamaican people. Since 2016, we have had no net new taxes on the Jamaican people. That's 8 budgets. And for the last 6 budgets, we've had no new taxes whatsoever. Jamaica has never had a period like this before. And people, it's very easy to relate this experience to the discipline, the prudence, and the commitment to sustainable policies. And when you experience something like that you've never experienced before, it helps to consolidate and to deepen support for reforms. The second example I'll give is that during the period of chronic macroeconomic stability, the progress that we would have made on infrastructure investment would have been much slower than it is today. Today, we are able to undertake multiple highway development projects at the same time. Just to give you an example, right? We have highway projects in the east, highway projects in the southwest, highway projects in the north in terms of the Montego Bay bypass. Never before in Jamaica's history have people been able to see the pace and scale of development, both private sector led and public sector investment as we have today. And that is a demonstration effect that we're onto something good. We're experiencing a major positive that we have not before. And then the third thing is that we've shared the gains. As soon as the opportunity presented itself, We gave taxes back to the Jamaican people. So not only did we not introduce new taxes, but we have given back and lowered taxes to the Jamaican people who have had the experience of continuous tax increases. And that has come about during this period of stabilization and during this period of commitment to sustainable policies. And by making sure that we continue to share the gains across stakeholders in the population, we've managed to maintain support for this path.
Let me switch more now to the future and move to climate change and what Jamaica is doing. Now we have been supporting Jamaica with an RSF. And the question is, what do you expect of this agenda? How can you protect, reconcile climate-related objectives with fiscal prudence?
So let me just say that, I find the RSF to be an incredible instrument, one that we have lobbied for a long time. Concessional kind of funding that recognizes the broader dimensions of vulnerability. 20-year funding from the IMF, 10-year moratorium, unheard of. And so as that product was developed, we made sure that we were one of the first to access it. The good thing about it is not only money, even though it's money that comes at a critical time, rising global interest rates, refinancing challenges, and we are able to pre-finance our refinancing with this facility. But it also comes with the support for the kind of climate finance-related reforms that is allowing us to crowd in private investment. With the RSF, we have been able to update our public-private partnership regulatory and policy framework by ensuring that climate-related and green considerations are a part of the PPP policy mix. We've updated our public sector investment program to make sure that the screening and prioritization of public investment projects takes on a climate resilient lens. And we've also tabled policies on electric vehicles as we try to accelerate that transition to a more energy secure future, recognizing that energy for motor cars is about half of the energy that we import. Now, these reforms we've been able to leverage to access financing that makes green infrastructure projects more feasible. The challenge with developing big green infrastructure projects is that, one, it takes money to prepare the projects and bring them to market. And you're competing for scarce resources for which there are high priority areas to which they can be deployed, social expenditure being one prime example. And having a project preparation facility which allows us to prepare these projects for the market without competing with other high priority areas helps us to accelerate the emergence of these projects. And yesterday we announced that with the leadership of the fund and in collaboration with the Inter-American Development Bank, the Green Climate Fund, the European Investment Bank, the United Kingdom government, and the government of the European Union, putting together a project preparation facility for green and climate resilient investments. And we also are domesticating, through these reforms, being able to attract capital to allow us to domesticate green financing resources. Infrastructure projects that are going to be strengthened with climate resilience considerations are often more expensive. And because they're more expensive, they sometimes are not financially feasible, and you have to blend financing in. The government can't undertake it all, so it goes to the market for a PPP structured approach, but the private investor needs to finance the delivery of that project. But if you're going to burden that investor with climate expectations, making it more resilient, putting nuts and bolts on it to make it resilient to disaster and make it more eco-friendly, then you're imposing costs on the investor. Now, how do you make it affordable for the government to buy the service from this PPP if you're increasing the cost? One way is to blend in other kinds of financing. And the innovation that I'm very excited about that we announced yesterday is that rather than going to the Green Climate Fund in South Korea on a project-by-project basis, on an isolated basis, we are domesticating financing on a portfolio basis in Jamaica, with the government taking the lead with a first loss layer and having multilaterals and bilaterals come in. And so our projects can have access to the blended sort of green financing to make them more feasible. And these are the kinds of innovations that become possible by embracing some of the climate reforms that I mentioned earlier. And of course, the third prong is the European Investment Bank, who has committed to provide grant funding and long-term 30-year funding, 10-year moratoria for projects that are climate resilient and that take advantage of the climate finance reforms that Jamaica has undertaken with the support of the RSF.
Thank you. Very interesting. Let me open for questions from, we have here one question, please.
Good afternoon. My name is Kenton Chance of the Caribbean Media Corporation. My question, Minister, I'd like to hear your views or the views of Kingston on the proposal by the Caribbean Development Bank that the recovery duration adjuster is a better reflection of the metric that should be used to classify Caribbean economies in terms of accessing developmental financing. And maybe as you respond to that, you can speak to the view that the G20 common framework is not working and should be replaced. And finally, what are your views regarding the international community and they not standing up to their promises? I call them promises rather than commitment as regards financing, mitigation, and adaptation to climate change. Thank you very much.
Okay, so on the first question, we certainly agree with the CDB that the considerations of vulnerability should be broad and not narrow. Income per capita is not an appropriate descriptor of vulnerability, especially for countries from who are exposed to climatic shocks. But I do believe that the multilaterals are taking that on board. We have been advocating for this over a very long period of time. And from our experience, Resilience and Sustainability Facility is an example of a response. And I would encourage others in the region to take a serious look at it. And we are seeing other responses with the commitment to having stop clauses embedded in new loan facilities from the World Bank. With respect to your question on the common framework, I'd prefer to reserve my comment on that. I would say, just speaking from the perspective of the Caribbean countries, none of which, probably with the exception of Haiti, would sort of fall under that rubric, because I don't want to get in commenting on other people's affairs. Our focus must be on ensuring that we have access to resources that recognize the multidimensional nature of vulnerability. And the good news is that we're making progress on that. We're making progress. Products are available today that would have seemed impossible to achieve only 5 years ago.
Thank you. More questions, please. We will put together a couple. Okay?
Thank you. Mark Burnman, Dutch journalist. I wanted to know, has there been any impacts of climate change on the fiscal position of Jamaica? And if so, has that also impacted your interaction with the IMF? Thank you.
More questions? Please. Here in the front.
Good afternoon. How are you, Sean Newman? how would you describe the country's debt reduction targets in light of recent macroeconomic shocks or global macro shocks?
So on the first question, Jamaica, like other countries in the Caribbean, we consider ourselves on the front line of this climate change reality. For us, it's not a debate. It's a reality that we experience on an annual basis. The intensity and severity of tropical cyclones and hurricanes has intensified over time. Now, these exact are fiscal costs, absolutely. It means that you have to divert spending from other priority areas for repair, recovery, and rebuilding. How Jamaica is responding is we're developing a multi-layered suite of products that give the government the capacity to respond to the fiscal pressures caused by natural disaster. We have embedded that in a national natural disaster risk policy that seeks to diversify the sources of funding and operates on the principle of risk transfer and risk retention. And we have several pillars that I'll go through very quickly. We have an annual budgetary allocation. We're building a natural disaster fund, which we hope to we capitalize it and hope to periodically add to that capitalization. We have put in place a credit contingent claim with the Inter-American Development Bank that releases resources in the event of a natural disaster. We have a Caribbean catastrophe reinsurance facility, which is parametric insurance. And the fifth layer we did with the World Bank, we became the first small country in the world to independently sponsor a catastrophe bond, which leverages capital markets to deliver funding in the event of a natural disaster. Now, these layers work together. They cover different quadrants or different parts of the quadrant between intensity and frequency. And as I've just described, represent multiple sources of financing that give us the best chance, we believe, to have the fiscal resources on hand in the event of natural disasters. With respect to the question on Jamaica's debt trajectory, we got severely tested during the COVID economic crisis, the largest economic shock in our history, like for most countries. And I'm proud to say that due to the many factors, including a very targeted approach, escaping from our fiscal rules, but making the decision up front that it's better to tighten with the wind behind your sails than to try to tighten afterwards. Jamaica is in a position where our economic output for the December quarter of 2022 was higher than our economic output for December 2019. Our unemployment is lower post-COVID than pre-COVID, and in fact, the unemployment rate is at a historical low. It's never been lower, 4.5%. And in addition, there are many countries that can say the first two, or some countries, but we are in scarce company. We are in unique company globally who can say economic recovery, jobs recovery, but in addition, debt is lower today than prior to the pandemic. So that is the answer to your question. Our macro fundamentals are stronger today. And I think the governor of the central bank is here somewhere. So I'll also say that on his behalf, our reserves are higher today than prior to the pandemic. So our macro fundamentals are stronger today than prior to the COVID-19 pandemic. And so we're well on our way to achieve our medium-term debt objectives.
I'll ask you the final question. We're running out of time, but I want to make a small comment. I heard something from the governor a couple of days ago from the minister that impressed me a lot. Governor's talk. He said it can be done. And I think that's very important, that these things can be done. It's not that that is impossible. It's a big effort, but it can be done. Anyway, my last question has to do with the global developments. And what worries you these days about the global context, global developments?
Well, I think things that worry me are similar to what worry others. The slowing pace of growth is something that we have to be concerned with. Jamaica is a small, open economy. What happens outside Jamaica has an impact in Jamaica. And so We carefully watch global growth. We watch growth in North America and in Europe, and that is obviously something that. But the good news is that they're, even though slightly lower, still positive. We'd also be concerned about the period of elevated sort of level of interest rates, seeming to be longer today than probably the consensus would have forecasted a year ago. And that comes with its own sort of implications. On the domestic side, we have to accelerate pace. One thing that I'm concerned about, and engage in the kind of reforms locally that can accelerate the pace of development and the pace of the improvement in public service delivery, in order to ensure that democratic support continues for the kind of agenda and reforms that we're committed to.
Thank you. Let's give a round of applause to